think we're at the stage now that Bitcoin's going to outperform virtually all crypto assets if my base case of a severe global economic reset or recession is pans out. In this case, I think Bitcoin will continue outperforming. I see Ethereum right now stuck between 1,000 and 2,000. Now it's at 1,700. 2,000 is very good resistance. It is the base layer for tokenization, crypto dollars, and things like that. But now we're in that stage where I think, if I'm correct, the stock market goes closer to 3,000, the S&P 500, and gold and treasury bonds outperform in this significant recession in the U.S., then I think Bitcoin will outperform virtually all cryptos, including Ethereum. And that's been the case so far this year. It's the existing trend, and I think it's going to more likely accelerate.
According to Bloomberg Intelligence's senior commodity strategist Mike McGlone, the ongoing banking crisis is reshaping the significance of Bitcoin and could be a catalyst for the next bullish cycle. McGlone believes that as the banking crisis intensifies, people's perception of Bitcoin will change, potentially leading to widespread adoption of the cryptocurrency. This shift in perspective could be the crucial moment that triggers a surge in Bitcoin's value. According to Mike McGlone's statement, the current banking crisis could be the trigger for the next cryptocurrency bull market, where Bitcoin $28,320, is expected to outperform all other digital assets. He believes that with the recent failures of major banks such as Silicon Valley Bank and Credit Suisse, people's trust in traditional financial institutions is eroding, making Bitcoin more appealing as a hedge against banking risks. In a recent tweet, Mike McGlone questioned what's preventing Bitcoin from surpassing most other assets. McGlone suggested that in a world that's increasingly embracing digital gold, Bitcoin is viewed as a valuable asset and speculation around it is waning. He also believes that the upcoming 2023 global banking crisis and the possibility of a substantial economic reset could be a pivotal moment for Bitcoin, marking a potential turning point in its growth trajectory. In another tweet, Mike McGlone suggested that the current banking crisis could shape the future of Bitcoin and other cryptocurrency markets. He believes that as banks struggle amidst the bond price collapse, Bitcoin is becoming more like U.S. Treasury, long bonds, and gold, indicating its potential as a safe haven asset. Additionally, McGlone sees Bitcoin's ability to maintain its value above $25,000 as a sign of its resilience and strength, distinguishing it from other assets in the market. Make sure you stay informed about our latest updates by subscribing to our channel and activating the bell icon.
Bitcoin was born out of the last significant financial crisis, or the Great Financial Crisis in 2008 and 9. And I think it's in the process of defining Bitcoin of global digital collateral. Now, that's the current state. Bitcoin has done very well bouncing back above $25,000 resistance. At the time we're taping this on Wednesday, it's around 27,000, while the stock market still is under pressure. And I think what's happening is we're seeing a significant rally in Bitcoin this year, up to about 73%. Obviously, it was two oversold last year, but partly because people are realizing that it's becoming more like gold and U.S. Treasury bonds, but just a higher beta version of gold. And it's gaining accolades as maybe not as so much a store of value yet, but as global digital collateral in a world that's going digital. So this financial crisis is quite significant. It's defining, and I think people are realizing one thing about Bitcoin: it's no one's project and no one's liability, and it's completely independent like gold. The thing is, it has that definable diminishing supply, and it's so low as far as adoption in so early days. And this seems to be the trigger. The banking crisis, I think, when people realize, oh, my money may not be so safe in a fractional reserve banking system. It might be safer in a fully collateralized stablecoin or crypto dollar. It seems to be hitting that inflection point that I've been looking for a while. I'm just kind of deer in the headlights watching, wow, is it really finally happening?
According to Telegraph Markets Pro and TradingView data revealed significant price fluctuations for Bitcoin/USD following a 25 basis point hike by the Federal Reserve, with both upward and downward movements observed. According to Mike McGlone, the Federal Reserve is still in the process of tightening, and the global economy is leaning towards a recession. As a result, he predicts that both the stock market and commodities will experience further downward pressure in the near future. In a recent tweet, Mike commented on the current banking crisis and Federal Reserve tightening. He described the situation as an oxymoron, pointing out that despite the Fed hiking, commodities are plunging, which could indicate an impending period of deflation. He warns that if the relationship between commodities, the producer price index, and the Fed is any indication, then deflation may be severe and long-lasting.
They hiked rates again. The ECB did a week ago, 50 basis points. And it's probably the last hike. Market's already pricing for easing, a little bit of easing, not a lot yet. But the bottom line is they're potentially tilting us towards a significant recession, potentially depression. I mean, the hike into you can't be a hawk in a bank run is the quote from my colleague Tom Orrick. He's our chief economist. And he wrote that a little while ago, and they just did. They hiked and we were having a bank run. So the ECB, this is a global bank run. And it potentially this country is just getting started. Remember, it's basically only been a year and 1 week since the first hike, the most aggressive hikes on a global basis ever. And there's this rule of long and variable lag. So what I see is the bank situation is a tree in the forest of what I've been pointing out for a while. Commodities collapsing started because everything is tilting towards recession, except things like unemployment. And unemployment can only go one way. It's so low, it can only go up, which means the recession is virtually guaranteed. You look at things like the yield curve. So I think the Fed is just way far behind, like they were so far behind in inflation. Now that inflation is potentially collapsing, and I'll point that out in a second, the leading indicators, peaking housing, the banking crisis, commodities, means they should have stopped, and they still hiked. So I fully see looking forward, we're going to have official acknowledgement of deflation, other from government statistics, not from forward-looking things like my commodities, and the Fed tightened rates. So they're so far behind. The key thing we're going to end with, we're going to find out and get, is now by this time next year, Giovanni, when we're talking, I'm pretty sure we're going to be talking about a significant enduring deflationary forces, the Fed not easing with the ease that it has in the past.
Mike expressed his views on the potential of Bitcoin in the current market. According to him, if Bitcoin can maintain its value above $25,000, it could indicate downward pressure on the S&P 500 index, potentially leading to a surge in Bitcoin's value. He also predicts that Bitcoin will outperform all other cryptocurrencies, including Ether, in the near future. He has expressed his doubts about the global economy's ability to withstand the same level of heavy dollar liquidity seen in 2022. He believes that this uncertainty may drive more investors to view Bitcoin as a viable investment option. He also notes that Bitcoin has outperformed 97% of companies listed on the S&P 500 index so far this year, further solidifying its position as a valuable asset in the market. Additionally, Mike suggests that banking issues may play a defining role in shaping the future of Bitcoin, with the cryptocurrency potentially becoming more akin to U.S. Treasury long bonds and gold as banks struggle amidst the bond price collapse.
We're talking right now with the S&P 500 around 4,000. I fully expect it to go to 3,000 in a recession, a normal recession, which is predicted the highest probability since 1982 from the yield curve. And that's going to be a pressure factor on Bitcoin. But potentially we're hitting that inflection now where this recession is going to be great for things like gold and long bonds. And the thing is Bitcoin in there? I think it's hitting that, but it's just hard to say for sure. But I think the more the Bitcoin can sustain above 25,000 and the more the S&P 500 potentially pressures below 4,000, you're going to have an indication that Bitcoin is just going to take off. And we have to get there. That the problem with the fintech and the new technology was the old guard technology, its deposit in the bank. And that's the extent that it dropped because of the potential that its bank deposit, which was fractionally reserved, was not safe. So what it's proving is these fully collateralized crypto dollars potentially are much safer than banks. There's no FDIC insurance needed. It obviously needs regulation. That's just a matter of time. It's how the U.S. regulates it that's going to matter. But it's happening offshore. Things like we've seen a major move away from USDC back towards Tether. Tether is the biggest one. It's controversial. But I've been just following Tether since it was around 2 billion back in 2018, and it just keeps going up with bumps in the road. Why? Because I think it's like what happened with Eurodollars about 5 decades ago when entities needed access to the dollar away from the U.S. banking system. They did it in banks outside the U.S. and created Eurodollar system. This is happening in crypto dollars. It's happening fast. The technology is overwhelming.
Micah suggested that a Bitcoin price consistently above $25,000 is a strong indicator of its strength in the market. Furthermore, he believes that Bitcoin's potential to outperform gold and traditional stocks will be bolstered by the Federal Reserve's ongoing battle against inflation. He has also expressed concerns about the safety of funds held in fractional reserve banking systems. Can Bitcoin truly serve as a hedge against banking risk and inflation? Drop your opinion in the comment section below. That concludes our discussion for today. If you found this video informative, please give it a big thumbs up and don't forget to hit the bell icon to stay updated with our latest videos. Thank you for watching.